Hello, everybody. Welcome to the market update with Murdock, Manwaring Company, Real Estate Group at Keller Williams Realty, East Idaho, your nosy neighbors, keeping you in the know. We are chatting about the market update for October 2023. And we're talking about the stats of the area in real estate. By the way, if you're wondering about what's going on in the market and you're having some concerns or questions, we would love to help you. Give us a call. We'd love to help you sell a home or buy a home. And it is still a great time, and we can tell you why. So speaking of that, these are the sections that we're going to go through today. By the way, you don't want to miss the last slide in section 1. We're going to talk about loan assumptions. That's kind of a hot topic right now. Is this, what does loan assumptions mean? So stick around for that. All right, Chad, lead us off.
All right, let's get rolling. So basically October, we're comparing October 2022 with October 2023. How are we doing market-wise? Well, we are down on homes year over year. We had 208 homes that sold in Bonneville and Bingham and Jefferson County. And last month in October, we only had 164. So that's down 21% on that. And so if we want to kind of take a look at how things have gone over time, I mean, if you move over here in 1919 on the left, you can kind of see how home sales were increasing, and then you can see how they started decreasing, and then rates went down, or rates went up, and then we saw sales even continue to go down even more. And so we did have a pretty.
I think you said 1919, Chad.
I didn't want to bring that up, but Chad lives in
2019. So. Thank you for that correction. 2019. We are not going back over 100 years. We're going back 4 years on this chart. So
that's when Chad kept the stats on a stone tablet. We have computers now.
Yeah, exactly. So anyway, but bottom line, we are seeing I mean, the purpose of higher rates is to try to decrease consumption, and that includes housing, and we're seeing how that's working, which, by the way, we did see inflation drop a half a point from where it was the month before at 3.2. So it's working. We're moving in the right direction. As far as
you're talking today.
This was today, yeah, every month.
You're jumping ahead of the stats video here that we're doing, because this is the result from October, but here we are November 14th, and inflation continues to go down, and so hopefully that is a leading indicator of things to come. Huh?
Correct. Yep. So anyway, if you want to see a breakdown, because I think people have a misconception on the market and where things are selling. I mean, most homes are selling, the majority by far are under 600,000. 124 homes sold under 500,000, as opposed to only 40 homes over 500,000 during that month. So
this plays heavily into the next slide when we look at the average price per square foot. You want to know it's averaged of all of these homes, up and down.
Yep. And so and we're seeing an increase. Month over month, about 4.6 above of where we were last year on an increase. It doesn't mean home prices are going up all over. We're just seeing, the average price per square foot. We're seeing an increase there. As far as homes sold year to date, this is kind of from January until the end of October. At this point last year, we were at 2,179, and this year we are at 1,933. So we're down about 12% year over year from where we were last year.
And Chad, that decrease has maintained for the past 3 months, right around 12. So we were building, and we've leveled out.
Yeah, yep. And we are guessing we'll probably see it continue the same through the rest of the year. So as far as average price, we're not too far off there. In fact, we'd probably call that flat. 407,000 is where we were last year. We're at 409,000. So prices have stayed somewhat pretty much the same as far as averaging them all out. Average price year to date, we are down. We're seeing it down. 434,000 was our average sales price last year, and this year we're at 411,000. So we're seeing a 6% decrease in pricing overall in Bonneville, Bingham, and Jefferson County in regards to the average sales price.
And that also has been consistent the last 3 months that we have that down 6% year over year to date has been consistent.
Yeah. Yeah, and we're definitely seeing the prices going down more in the upper end of the higher prices of things. As far as list to sold prices, in October of last year, we had a 92.1%. So people were able to offer less and get the deal put together. Now we're seeing it at 96.4%. So homes are actually going under contract closer to list price again. And I
So
think a
Chad,
lot
on
of
this
that
one,
just has to do with the market being able to have them priced a little more accurately as well.
yeah, we hit in about October of last year is when the sellers really were still trying to live in that price it high. They were still trying to adjust to the fact rates had adjusted so much and they're going to need to come down on price. Our sellers now have kind of settled in a little bit more to that. But in October, it was still a real hard to get a seller to understand that their house is not going to sell at the beginning of the year prices.
Yeah. So in other words, the dust is pretty much settled. People realize, hey, this is not as hot of a market as we used to have. As far as year to date, we're actually down a little bit from where we were. So 97.4% year to date, and we're at 96.3%. So we're down about 1%. As far as days on market, in October, it took a little bit longer to sell a home, about 6 days longer. We were at 49 last year. We're at 55 now, so about 12.2% longer to sell a house, which in this world that means about 6 extra days is what we're taking to sell a house. And if you want to compare that that's pretty close to about where we were in 2017. So still a good market. The reason why we show this slide is we just want to show you, how we were compared to 2012 when we were really at in a way tougher market. And we're still in a good, strong market if you are selling below 600, especially under 500,000. Strong sellers market, that is. So average days on market year to date, 32, and for a year to date, we're looking at 58. So we're up about 81% of where we were year over year.
So this one, when we look at those, remember the year to dates include that January through May, which was still hot last year, really hot. But what's interesting is we're at 81%. This is the first time in 4 months we've been under 100% of change in average days on market. So we're starting to get that average. Next year will be, of course, a big difference. But that January through May really was low, 5 days, 6 days. So to get that average of year to date is now we're starting to catch up. We're at least now at 81 instead of 130.
That's right. That's right. Well, next slide is about are things overpriced or not? So Jess, you want to hit us on that?
Yeah, let's talk about that. So we talk about the averages. Are your houses going up? What's the prices going up? When we look at the whole market, it encompasses everything from the $1 million homes down to the $100,000 homes. And that gives you your average. Let's talk about apples to apples and what does that look like in the market? So we're going to talk about houses, which is kind of the average home in Southeast Idaho, which is between 2,400 and 3,000 square feet. It's at 1 to 2 car garage. It's on 1/4 of an acre to 1/2 an acre, and it has at least 2 bathrooms, so finished basements. So let's compare that house to this year to last year. And that gets us into talking about, finished basement. What the sold price in October for this specific house, there were 16 that sold, was $153 per square foot. Last year, interestingly enough, this house sold at $150 per square foot in October. So we're actually up $3 per square foot on the same houses this year to last year. So that's a really good trend that we're not trending back down. Now, this is super interesting. The pendings right now, where they have not closed, but they're currently under contract, they're at $143. That's $10 per square foot difference on what they sell for versus what's pending now. That makes us feel like we're trending downward, but we're up over last year. So this is kind of a funny slide to kind of take into account. And the active homes like these on the market, there's 25, $155 per square foot. So this is let's watch what's happening in the next couple months, because this is one snapshot of a month. But that is an interesting scenario. Are we going down in price if those pendings are pending at a lower price? Well, let's take a look at this same home over time. So if we take a look at this home over time, and let's compare 2023 to 2022 month by month. Oh, I didn't realize this animation is going to be real drawn out. So as we look at this over time, right now we're at 153 per square foot. And you can watch this as it slowly builds. Wait a minute, can I just go like that? There we go. Here we go. We'll get past that. Sorry. Slowly builds. Take a look at the month over month each month. So as of right now, our lowest price per square foot for the average home in Bonneville, Bingham, Jefferson County, our low point was January 2023. That was the lowest price it was. We're already back up over $10 per square foot just this year. Last year, the height, when was that house the highest possible price? There's that button, March of 2022. Our rates changed in March. And then you started to see the market adjust a little bit. So this is a really good indicator of what we've seen. But if you're saying we're going to keep going down, this indicator says we're not necessarily going to keep going down. We're already going up in our price per square foot on our average home. So let's talk a little bit about what we talked about in the little bonus. Let's talk about assumable loans. This is kind of a hot topic right now in the market, is what happens if a buyer has a loan that's an FHA or a VA loan. Those can be assumable loans. I don't really know a lot of conventional loans that are assumable. Most of the time it's a government-backed loan. And what that basically means is that a new buyer can go to the existing current lender, apply and take that loan over, which means you get the terms and the interest rate of the current loan. Now that's really awesome. If someone's sitting at a 2.5 or a 3.5% interest rate, that seems really exciting for a buyer. So a seller's like, yeah, I've got that to offer. The difference is you can't increase those loans. So that's the one thing buyers need to know about. You cannot increase the loan to cover the difference of what's owed to what the new purchase price is. And as we've seen over time, that is going to continue to go up in price. So if someone got a loan and they've had the house for 4 years, let's say they refinance at some point and they're at a 2.5% interest rate. Amazing. But to buy that house at $400,000 and they only owe $2 million, you have to have $200,000 of cash to acquire that assumable loan. And I think that's the misconception with people. And I don't know a lot of lenders, I've talked to a lot, that will offer a standalone second to get that, to acquire that property. But there's options, there's things we could think about, whether you got to borrow the money from a family or someone's equity, and then you could do a refinance and do a home equity line of credit after you own the house. There's some things, but that's the key of assumable loans. And it's only owner occupied. They don't let investors assume those loans. Now, a VA loan is also assumable, and it can be assumed by a veteran or a non-veteran. But if it's assumed by a non-veteran, that veteran's eligibility gets locked up and stays with the house. So most veterans don't want you to assume the loan if you're not a veteran, because they want to take their eligibility and move on to buy another home with their another VA loan. So just know those are a few of the ins and outs, but the real key is working with somebody who understands, especially if you want to sell a home that has assumable. Make sure your real estate agent, hopefully Murdock Manwarings, that they understand how to market that and really how that works, because you've got a plan for 60 to 90 days before you're going to close that deal. So it's not fast, and it's a little complicated, but it can be done, and it can be a great thing you can offer to potential buyers. All right, Jeremy, pick it up from there.
All right. So we are looking at a snapshot of just October, 260, and this is for active stuff, right? We've been talking about sold and pending.
This one is new on the market.
New on the market. 269 came on the market, which is a 9% increase from the month before. And the average price of those homes that came on was 438. 192 went pending, which is a decrease of 20% from the month before. And 37 of those fell apart. So we're seeing some interesting things that are affecting the number of closed, because not as many are going pending, and some of the ones that go pending actually don't end up at the closing table because they're falling apart somewhere with financing, inspections, and just basically buyer fatigue is probably what I would call it. So here's new listings over time, so you can kind of see the trend in the average per, for the months that they came on. Last year, there in January, or this year, we saw 236, 198 the year before that. But here in October, we actually saw a little more than October last year. So, there's some things that, you look at it 1 month at a time, you don't get the whole story, but over time, I think as we watch these things, we'll know where the big problems might come up. 60 homes that were active that came onto the market said, hey, I'm done. I'm not even going to try to sell anymore. The average days of those homes of people that took it off the market was about 100. And so the average price was 502. So probably the upper end, people may be too overpriced or priced above 500,000, pulling those up. And see the average price of the square feet of the homes that withdrew was over the sell price that we saw on average. So they wouldn't come off of the 183 average, but we're realizing 172. And so unless you get priced to that point, the market won't come up to you quite yet. So that's an interesting one. Couple of the last ones here that we want to cover. Currently on the market, there's 532 available properties, which is a little decrease from last month. But we're seeing a 77 days on the market for those and a 96.5% original list to current price. So we've already come down from our original list price and people are sitting at 96% of the original. But the average price per square foot still is a little higher than what it might sell for. There's a lot of factors that go into that price per foot, but it is kind of a one you can look at. So months of inventory, we're at almost 3.5 months, which is tells us it's still a seller's market because it's less than 4 or 5. But I think we're seeing some things that are affecting that, and it could flip-flop sooner or later. But back to that other one, that the price is really going to dictate it, right? So we're having sellers pushing longer days on the market, but not coming down to where the 172 price is. And so sellers are still pulling the market and buyers are still pulling on their end. And there's going to be an equilibrium at some point, whether that's at or below 172 or at or below 77 days. I think that's what we're trying to figure out and find that.
Jeremy, we're up a month on that inventory over last month. So month of inventory has gone up a month.
Full month. So that's pretty big. Here's the current active inventory in those 3 counties that we cover. We used to have about 50-50 on closed and available at that 500 mark. Now we're seeing more homes available under 500,000 and some of those upper priced homes above 500,000. I think those are probably a chunk of them that came off the market, not moving quite as quickly, but there isn't quite a 50-50 anymore. So there's less homes available over 500,000 than there were.
Those days on market, even our hot market, still at 56 days.
Which part are you talking about?
Our hot price point is the 300 to 399. That's still 56 days on market. There's a lot of homes there, and there's still, so nothing's based on this. They're still been sitting there for a while. So just know there's not one market still selling in 5 days sitting out there.
Got it. Good point. And there are 150 available homes. Is that what we're seeing? So under 500,000, there's a 2.5 months of inventory as we kind of separate the price points. 4 months in between 5 and 7, 5.5 months over 700 to $1 million. And this is the big one, over $1 million. If you're priced, there's 16.5 months of inventory. Not many transact right now for the number of available properties. So here's a current pending listings. There's 218 with an average price of $411. And that when they went pending, they were 95% of what they originally listed at $173 a foot, which we saw 172 as the average. So it probably going to be close to that point with the 57 days on the market number. Just the city of Idaho Falls, we take out those other counties and we pull in the high schools of this area. In October, there was 83 homes sold with the 43 days on the market average, which is down 14%. We typically will see more activity in these high school areas than all around, but this month we're seeing a little bit of a decrease. Homes on the market now is an increase from up to 315 with a 90-day average on the market, and that price reduction percentage already built in, right? And so we have an average days or inventory level of 3.8 months, which is up from last month. So,
and it's been a while since Idaho Falls has a higher absorption rate than the counties.
that's right. That is interesting. So that's it for the stats. We're excited for inflation numbers that came out. Chad mentioned that hopefully rates will continue to soften and go down a little bit. Affordability will go up so more people can buy homes. One interesting thing we didn't have on the stats, but the average age of home buyers was below 30. I think it was 24 10 years ago. Now it's 36. First time home buyer average age is 36. And your second home used to be below, I believe it was 40, but now it's a 56 is the average age. And so affordability is a real thing. And I think that there's different segments of the market. Single women, I think, was one of the biggest segments that hasn't shown up before. And now they are showing up into the market. And so we're keeping an eye on the buyers and the listings of what's going on, and we'll keep you guys informed. So thanks for joining us.
Yep.
And if you want to get these in your email, just head to mmcidaho.com, click at the top to get the newsletter, and you'll get this in your email every week. Because I think it's going to be exciting. The next 6 months, I think, should be some pretty good stats.
Every month, not week.
Right. Thank you, Jeremy. Every month. Appreciate it.
1911 and every week.
That's right. Awesome. And if we can help you, give us a call.
Yeah. All right. Cool. All right. Thanks, everybody.
Yeah.